Hey everybody. Welcome this morning at very early in Perth at 8 o'clock and reasonable in the other parts of the country. For those that don't know, my name is Peter Christie, CEO and Chairman of Activeport Group. And today's presentation is to take everybody through the deck that we put on the ASX portal last week. That presentation was given to the Emergence 2025 conference in Sydney to numerous hundred people, which was fantastic turnout. It's a very sparsely populated deck because it was designed to be presented to a live audience. And so I felt it's probably worthwhile taking our ASX investors that weren't at that event through the presentation and elaborate on some of the content that's in there. The deck is designed to take around 12 minutes. I think it'll probably take around 15 today, and then plenty of time for questions afterwards. So let me start for the uninitiated about talking about what Activeport software does. And I always like to put it in terms of our users. If you think about our enterprise customers are IT managers typically. So if you imagine yourself as an IT manager, say you're managing the global network for BHP, maybe you're managing the global network for Louis Vuitton, where you're chaining together a lot of retail outlets and wineries and production facilities, etc. Maybe the network manager for Commonwealth Bank, where you've got a large national network of bank branches and data centers. Our software is, if you think about their daily life, they spend a lot of money on compute, storage, and networks. And the experience for an IT manager to buy compute and storage today is quite instant. If you think back 10 years ago, it was a very labor-intense, capital-intense process. But today, if you want compute and storage as an IT manager, you go to AWS or you go to Microsoft's Azure Cloud or Google Cloud, you can dial up compute and storage instantly and be working straight away. But when you want to buy a network to connect that compute and storage together and to connect your users to the compute and the storage, that's a very laborious process still. It's not minutes, it can be 8 to 10 weeks to get a network service provisioned by a telco in most countries around the world. And so what Activeport software does is cloud enable those traditional telco networks and data center networks to make them as easy to access as it is today to buy compute and storage. We cloud enable a traditional telco network so that the IT manager can buy network connectivity in the same instant online cloud-enabled manner that they buy compute and storage today. And so when you think about the utility of our software for an enterprise customer, it's very, very high because we're shortening the time it takes to construct a network where we're making it easier to consume telco services. And we sell our software primarily through the telco and data center channel. And so those customers of ours, the telcos and the data centers that are paying us license fees for our software, are getting a lot of value from the product because it's enabling them to sell more product quicker, shorten the time from order to cash, deliver their services faster. It's got a very high utility. Our software has a very high utility for our customers and their end users. And so we feel that we're in a very strong place to be able to monetize that market. Now, if you think about networks, I'm sure you don't think about networks, but if you did, you would realize that they come in two predominant flavors, either a customer tenancy, so a building or a branch or a mine site or an office or a factory connecting to a service on the internet. And those services might be data centers, they might be network ecosystems like Megaport or Console Connect or Equinix's Fabric. They could be cloud services from AWS, Google, Azure, etc. And they might be other partner products and Veeam and backup services and different cloud services. And so if you think about our software as a network automation product, the first use case is connecting customer sites through to those cloud services. The second use case is data center to data center. And so most companies today have their compute and storage, data storage capacity inside data centers, and quite often they have more than one data center around the world. And so they need to be able to connect their compute and storage in one data center location or one rack out to another rack somewhere else. And more we see customers connecting between their racks. So customer A connecting to customer B's rack and so on. And so the two flavors of deployment for our software is end user or what we call edge to service, and then DC to service or DC to DC. Now, having explained what our product does, this presentation is designed for investor conferences. And so this part of the presentation, we talk about what makes Activeport a good investment. And so instead of talking about the technical virtues of our software for investor conferences like Emergence last week, we talk about the investment value of Activeport as a business. And so let me delve into this. In my view, personal view, what makes a software company like Activeport a good investment? Well, the first thing I always look for in software businesses is a broad market. So does the company build a software product that is useful to a large group of customers? The second thing is high ARPU. So average revenue per user. How much revenue do we earn as a software license from a particular user or a particular business? And Activeport has certainly got a high ARPU. Now, it's not to say that a low ARPU software business isn't a good business. There are plenty of examples of those. I mean, if you think about a business like Dropsuite, which had an average revenue per user of about $2.50, but a market cap of $400 or $500 million. It's not to say that a low ARPU business isn't a good business, but a high ARPU software business typically has a lower capex to get to profitability than a low ARPU business. And so high ARPU's got some specific benefits from an investor's perspective, especially when it's a startup software business like ours. And the third thing that I look for is recurring revenue. We obviously want to invest in software companies where we don't have to get up every day and generate a new set of customers to replace last month's customers. We want to make sure that the recurring revenue from the business compounds. And so every month we add new customers and that revenue continues to grow over time. So those three elements in my mind are what makes a software company a good investment: a broad market, high ARPU, and really strong recurring revenue. And I think Activeport delivers across all of those. Activeport operates in the telco and data center market. We also do a lot of work in cloud and GPU across gaming and AI. If you add those markets up together, in particular the telco industry and the data center industry, their revenue globally is $4 trillion. And our software fits them all equally. What I like about our addressable market is that it's consistent around the world. Whether I'm talking to a telco in Oman or India or Southeast Asia or America or Europe, South America, South Africa, it doesn't matter where we are, the telco use case for our software is the same, and the data center use case for our software is the same. So we certainly have a very large addressable market. Our average revenue per customer can be $2 million or more. Now, not all customers spend that much money with us, but typically a large telco or a large enterprise customer of ours would be spending that type of number on an annual basis with us, and that compounds and grows within these customers. And so our average revenue per customer is significant and equal to other enterprise software operators in the market. And the term is quite long. Most of our telco and data center operators expect to have our software installed for at least 5 years, but really once those customers are using our product to generate a significant amount of revenue, that term is likely to be quite extensive. We've had telcos say to us that they believe that the relationship with us is 25 years plus, and that's probably right. Once our software is embedded and entrenched, it's not the sort of product that would be churned out easily. And so the term of our recurring revenue is significant. And of course, these are the 4 industries that we operate across. The telco sector is our primary focus. Along with that comes the data center sector. We do a lot of work in the GPU orchestration space and are working closely with AMD and very soon NVIDIA. And that is leading us into the AI market, which to date hasn't generated significant revenue for us, but it's a very, very large opportunity coming forward in the future. And so why invest in Activeport and why now? For those that don't know, Activeport listed on the ASX in 2021. When we listed, we had no software revenue. So we really are a software startup. We rolled up some managed services businesses, and that gave us the bulk we needed to get going. But now we're swapping out the managed services revenue with our software license revenue, and you can see that reflecting in our gross profits, because obviously the business that we're chasing in software is a higher GP than our traditional managed services business. So when you think about it, we listed in 2021. We've had 3 full years on the ASX. We really are a software startup, and we've been quite successful. But why invest in Activeport and why now? there are three areas that I like to focus on. The first is risk, the second is competition, and the third is timing. I think we've got all three of these elements well and truly in our favor right now, and that makes investing in Activeport right now probably very, very good timing. But let me delve into these three a little bit deeper. The first one is risk. As I say, we listed on the ASX in 2021 with no software revenues. So we worked very, very hard to make sure that we had a complete product. We had what I would think of as minimum viable product back in 2021, and we've been working very, very hard to build out the feature set to suit our target audience of large telco and data centers and GPU orchestration. And so from now, you could almost say that we've got too much product. We've built an enormous amount of software over the last 3 years, to the extent that we have a solution that is absolutely comprehensive for our target audience across all facets of their network operations business. And so we feel that in terms of de-risking the Activeport business, we have a very complete product set now. We did step out to find the right product market fit, and we were quite successful in that. We didn't start selling direct to telco to begin with, but when we did, we realized that we didn't have a lot of competition in that market, and there was a huge amount of demand. And so we feel that we've got our product market fit correct. We've worked very, very hard the last 18 months to get our financial structure sound. Some people would realize that we had a significant amount of debt coming out of the roll-up. We've eliminated most of that, if not all of it, very, very soon. And so we feel that the balance sheet of the business is on a much stronger footing today than it was 2 or 3 years ago. And then getting the right team in the right roles. We have got a perfect group of people working the business. We've got the right number of people that are in the right roles. We're in the process of moving some people to different locations, in particular India and Europe, to take advantage of some of the opportunities that we have in those markets. And so having the right people in the right roles and in the right locations is very, very important. And I think we've got there now. And of course, that means that we can focus on scaling up. And so right now, most of our attention is on delivering proposals to customers, getting contracts signed, getting our product installed, and getting to first revenue and for as many telcos and data center operators as we possibly can. So in terms of why invest in Activeport and why now, the first question is risk. And I think from a startup software company perspective, we really have de-risked the business and can just focus on scaling now. And then if we think about competition, so one thing that we do know is that we have a very unique solution. It's in high demand, and it was surprising to us, but it's been quite pleasant, is that there is not a lot of competition for what we do in the telco sector. There aren't many other products that we've come across, if any, in a lot of cases that are competitive with what we do. And how do we know that? Well, we know that because when we respond to tenders, competitive bidding processes in the telco and data center market, we find that we don't have many bidders. In fact, the last RFP we responded to, we were the only bidder. That tells us that we're not working in a pond of suppliers where there's 10, 20, 30, 50, 100 suppliers competing for the same business. We're operating at a very high target, large target addressable market, and there may be only 1 or 2 reasonably competitive alternatives to what we do in that sector. And so while we've got that opportunity, we really need to capitalize on it. So in terms of talking about why Activeport, why now? Well, we are really focused on capitalizing on the fact that we have a market lead in a very, very large market and a lot of demand for the product and the things that we do for our customers. And then the last thing to talk about is timing. So in terms of why Activeport and why now, I think there's a time when a business like ours gets to a point of consolidation, and then we're ready to grow. And we've spent a lot of time trying to get to the point where our recurring revenue base is consistent, so it's easier for analysts and investors to understand the trajectory of our underlying software business. And you can see some hints of this in the table here. There was, in our half year, a reference to a significant reduction in revenue from the previous half, December 2024 to the current 2023 to the current half end of December 2024. And what that was is the one-time license revenue you can see in row 2. So if you look through that report to our recurring revenue on the top line, you can see that FY24 we booked $11.7 million of software and service recurring revenue. In the first half of 2025, that's at 5.3 million, which is consistent. I mean, there is some recurring revenue that we have dropped because it isn't core to our business. It isn't core software-driven recurring revenue, but you can see some stability quarter on quarter across that recurring revenue base. And as we're adding more customers now to our software business and our software as a service business, that number should continue to grow, and we should be able to show a continuous upward trend quarter on quarter across our recurring revenue. But it's the one-time license revenue that is somewhat confusing to casual investors. In December of 2023, we booked a significant one-time license invoice of $3.3 million. Now, we've done that again in December of 2024 for $4 million, but we haven't booked that to revenue. We haven't booked it to revenue, as you can see in the notes. It's a license for our GP orchestration software. It's conditional upon the customer completing their round C. They should have that done before the end of June. We have extended that agreement from February 28th to June 30. And so assuming that is complete, there's a $4 million one-time revenue booking to be done in the second half, similar to the $3.3 million revenue booking that was delivered in FY24. And so if you add those two together, you can see that the total revenue in FY24 is $15 million. And the total revenue for the first half, if we include that one time as we have for the previous half, is 9.3. So I think we're on track to deliver a very, very good revenue result for the total year. But it's clouded and confused by those large one-time license deals that we continue to have. And we've had a number of those over the last 3 years of multi-million-dollar license bookings, which is great, but it hides the underlying trend of recurring revenue growth. What you can see is that as we add more software revenue and less services revenue, our gross profit increases. And so you can see that our gross profit for FY24 was 54%, but our gross profit in the first half of this year was 67%. I think that's very important because software for us is a very, very high GP product. The more license revenue we book, the higher our GP gets. And I would hope that over the next 12 months, we can get our GP up into the high 70s across the business. What we're particularly happy about is the debt reduction. If I go back to our debt 2 years ago, it was in the $4 million range. At the end of the half, it was 2.1. In January, we paid down our R&D loan finally, and so the number today is 1.1 million. And if you look at the $4 million license deal, that to the business is a net $6.2 million of cash. If that is booked in the second half, then obviously our debt will be definitely zero. In fact, our cash reserve will be quite significant. And so it's been a history of our business over time is these one-time license deals do tend to cloud the underlying recurring revenue. We're doing our best to make sure that we separate those two revenue lines so that investors can understand the financial trajectory of the business better. And so if we go back to the point of these slides, which is why invest in Activeport and why now, obviously we've de-risked the business, we've found our product market fit, and we're scaling. We're finding very little competition in our core market of telco and data center. And so we've got an opportunity in the market right now to really close out a lot of business and increase our recurring revenue base significantly. And we've done a lot of work to make sure that we get our recurring revenue base stable, and so we can show an upward trend in that and reduce our debt on our balance sheet to get the balance sheet into good shape for the future. And I think we've succeeded in all those things, and that's why I say that investing in Activeport now is a very, very wise thing to do. And so what is the investment opportunity? Well, for us at the moment, what we're chasing is another $430,000 a month in recurring revenue. Can we achieve that? Well, we have 2,000 prospects in our pipeline across the telco and data center industry. That covers the tier one telcos, of which there are about 750 people, and then goes to the data center market, and then the tier two telcos and ISPs as well. So those 2,000 prospects globally should quite easily deliver that $400,000 or $500,000 in incremental recurring revenue that we're chasing this year, because each of those customers spends at least $20,000 a month, some of them spending upwards of $150,000 a month in license revenue with us. And so we've got a very large opportunity base to generate what is not a difficult target to meet. And we have very, very leading technology. Our software is market leading across what we do in network orchestration, across what we do in GPU orchestration. And so I think we can take advantage of that to deliver the outcomes that the investors and that management and Activeport are looking for. On that, I'll open it up, Lisa, for questions.
Peter, we don't have any questions at this time.
Excellent. Should we give it a minute?
Sure.
What is the process, Lisa, for questions? Type in the chat.
Yeah, type in the Q&A. But they've... Oh, here we go. One moment. No, I can't. I haven't got any questions here. If anyone does have a question, you're welcome to email the investor.relations@activeport.com.au and Peter can follow up directly.
All right, perfect. On that note then, I think we're done. Appreciate everyone's time and enjoy the rest of the day.